The first rates then on your screens, it's a fresh high yet again, 19,400. A smooth start of about almost 0.5% is what you're seeing right now for the Nifty. I can see the mid-cap index though is a lot more tempered, so is the Nifty Bank. The first stocks that you want to look out for is IDFC as well as IDFC First and IDFC, so look out for what those names actually do in trade. And then of course we're going to start off with Reliance as well, considering Jio has launched the internet-enabled Jio Bharat 4G phone, and that comes at a drop-down price of just $9.99. Reliance a little bit tempered in trade though this morning. Hero MotoCorp, they've launched X440, that's a bike in partnership with Harley Davidson. It's going to be competing with the likes of Eicher as well as Bajaj. Hero MotoCorp starts off with a move of 1.5%. Let's see what Eicher as well is up to. More than Bajaj Auto, it's Eicher which has dominated this particular segment. Eicher has gapped down 4% lower for Eicher Motors as we speak right now. Bajaj Finance, what a strong quarterly update coming in. The Q1 new loans have come in higher by 34%. The AUM growth has been the best in 14 quarters. Bajaj Finance has gapped 6%, and that's a heavyweight giant which is moving with that kind of momentum. 6% higher for Bajaj Finance as we speak right now. There's Biocon as well. We just reported to you. They've launched their biosimilar in US with a drug market size at about $18 billion as of calendar year 22. Biocon 0.8% higher as we speak right now. And Lupin also, which has got the US FDA and a nod for one of its nasal sprays. So look out for what that stock as well does in trade. Still settling down for both IDFC First Bank, IDFC Finance Holding and IDFC, remember, are going to get merged with the bank. The ratio at 155:100. IDFC First Bank lower by 3.25%, and IDFC, the holdco, is higher right now by 2%. The last time I checked, almost 3% higher now as we speak. So these are a bunch of stocks which are going to be in focus. I also revisit the big movers from yesterday, and yesterday was the traction day when it came to smaller banking names. So be it Canara Bank, be it BOB, they all held out. There was of course L&T Finance also after the management rejig that got announced, which was a big mover, held out by nearly about 7%. So let's revisit the print on L&T Finance Holdings. Right now it's a little tempered, 2.25% lower as we speak right now. What are the big boys from the oil and gas space doing? We talked about Reliance. Reliance was tempered, but what about BP, IOC? And then, of course, a decent move coming in on SBI as well yesterday. They look a lot more tempered right now. But yep, the Nifty level, that's not going to give you any reason to complain. We continue to hold out at that 19,400 print. Kunal, the first trades that you're punching in.
That'll be on SBI. I think the PSU banking stocks and the pack looks very attractive at current levels. I think SBI has been something which has just recently found its mojo back, breaking past the 575 mark on the spot level. So would suggest to buy as well as looking to buy SBI at current levels for a target of at least 610 to 620 over the very near term.
I also want to check in on what Avenue Supermart is up to, considering their quarterly update was not looking all that impressive. So that stock will just come up for you on your screens. It's really been all over the place, currently higher by about 0.4%, but I think we should just give it some time to actually settle down. The Sensex, by the way, it's surpassed 65,550 for the first time ever. So we're really in blue sky territory, both for the Nifty as well as the Sensex right now. Just awaiting the first rates within the F&O market. They too will start trickling in. But Naresh, the first rates are trades that you're punching in.
So a buy on Jindal Steel, keeping a strict stop loss at 580, expecting a move towards 650 in the short term.
All right, there you have it. Those are your first trades being punched in by our chartists. Let's find out what the outlook is on the fundamental side as well. Pratik Agarwal is the Executive Director, Business and Investment Strategy at Motilal Oswal, and now joins in on the show. Hi Pratik, morning. Let's begin by talking about the catch-up play within the heavyweights. The likes of Reliance Industry or the HDFC Twins, for instance, have definitely started performing, but just right now, how much of support do you believe that they are likely to lend the markets in their move upwards?
No, so On valuations, while we are at a high, if you compare the two highs, this one and the one that we reached last year, sometimes in October, on valuations, we are still 4-5% cheaper, because in the interim we have seen a compounding of EPS, and that makes valuations a tad cheaper on the heavy weighted on the large cap index. Now, we are seeing strong inflows from everywhere, and which means, we are seeing one space after the other follow up, and there is some amount of rotation which is going on. Until the flows continue in this manner, I think this should be expected. Now, in terms of which part of the market is expected to do better, my thought here are slightly different. Most of the themes that we are talking of lie in the mid-cap space. Think of anything, China Plus One, PLI, Make in India, whatever. Most of the beneficiaries, most of the best exponents of the theme are in the mid-cap space. Second, if you look at the large cap indices and you segment the indices into names which may be facing some issues, yes, flows of money can take everything up, but if the larger caps are facing issues, we believe some of the largest caps in the country are facing issues of one variety or the other. I think the second half of the index is where we will find alpha opportunities. Besides that, like I said, in the mid cap space. So not really looking at the super large caps to drive index in any meaningful manners. Index is fine. We are looking at just about double-digit kind of returns to the fiscal year end, which means again returns from the top end should be expected to be muted to my mind.
Pratik, I'd beg to differ. Since you talked about super large caps, look at Bajaj Finance. That stock alone is up almost about 6% Can we just have that intraday graph right now? I mean, how do they do what they do? Q1 new loans are up 34%. There you go. Bajaj Finance is up almost 7.5% right now, Pratik. And AUM growth, the best in 14 quarters.
Yeah. No, so when I said super large cap, it was by weight in the index. So this guy is not up there. So, but anyways, so yes, good set of numbers. And if they have done this, then one should expect something similar with other businesses in this space. People who are lending, taking advantage of the technology, I think one should expect similar growth from all of them.
Fair enough. What about the outlook when it comes to the competition that's heating up within the two-wheeler space with all of these new launches, the latest, of course, being Hero, Harley? How are you sensing players really sticking out and continuing to hold on to market share? And what's your outlook about some of the challenges? Do you think that now they seem to be out of the way?
See, I would be a party pooper here, but let me do it. I see two-wheeler market as having saturated. Most families in India have a vehicle. So the play is either that you premiumize, okay, or the winner or net value creator would be a new entrant in the EV space. Somebody who is doing very well on the ICE side will just replace if you move to the EV side. You don't add value. Okay, and that is an issue that I see in the two-wheeler space. In my mind, it's a net zero kind of a situation for most of the larger guys. For guys who are capable, have a good platform, good R&D facility, but for some reason did not succeed as much in the ICE space, have this disruption to back them up, gain market share in the EV space. We see that happening both in the two-wheelers and in the passenger vehicle space. Really don't see the guys who are super large in the ICE space adding much value, especially if the valuations are today peakish.
Prateek, how things with you? Haven't interacted with you in a while.
No, very good. Getting better.
I'm asking a very simple question, which in a sense we are trying to ask everybody, which is that what is that first sign or what are the first signals which you would look, which will convince you that we are nearing a short-term peak?
No, so like I said, valuations are something which are reality, which act as gravity. So yes, flows can the market higher versus reality, but one should always keep an eye on valuations. And hence, when the larger cap index question came, I said if we work with 18 and a half times 1 year forward earnings as the construct, then we are just about 8-10% away from where the index should be. Now, index has its own life. It can, go surpass that, come back, underperform and rise. So, the track that one can take can be different. But that is how it is. In the mid cap space, again, the same thing is true. There, the indices are actually 10% higher than the earlier peaks. The traction in terms of earnings for these spaces which are in focus has been higher. So it is sustainable. As yet, I don't think it is getting into unsustainable territory. But increasingly, we are starting to see, ideas not focused on earnings, more focused on sum of part kind of stories. In the beginning, it is okay. You will still have some runway, but that is the first sign of things getting a bit जिसको कहते हैं exuberant.
It's in the second half where you will see that alpha generation from within the broader end of the market. Tell me what mid-cap pockets are looking interesting and are they to be bought right now?
Yeah, so lot of mid-cap pockets are looking interesting. I tend to see the market in terms of theme. So what happens is everybody today looks at 2 year hence kind of earnings project and buy basis what is looking, better on valuations, quality kind of a mix. And hence, to my mind, that is not going to result in any significant alpha. It has to be growth sustaining beyond those 2 years of projection period, which is where longevity of the theme comes in. I think there are spaces where growth of a order higher than that of the index will are meaning today, and that is what makes me believe this is time for alpha for managers. So spaces could be, while times are not good for chemical companies, but maybe a good time to accumulate. The growth story is super strong in volume terms. So that is one. Second, EMS companies, company after company that you would want to look at in this space is benefiting from PLI, is benefiting from Make in India, benefiting from global guys wanting to move away some bit of supply chains into some other country. If you are looking at retail banks, now this is a space where you will still get over 20% kind of retail AUM growth, the part that you want to buy, that the part that we want to buy, versus the bank who want to do everything, corporate and retail, where the growth may be 14-15%. So segregating that. And there are other spaces, engineering is something where we see a lot of traction. Defense continues to see traction and momentum as we go forward. Luxury and retailing is something that one should have as a core of the portfolio, because
All
here...
right, Prateek, good to have you as always. Thanks so much for sharing with us your outlook. But time to put the spotlight then on V. Vaidyanathan, the Managing Director and CEO at IDFC First Bank, speaking to ET Now.
Well, it gives me great pleasure now to bring the man of the moment, Mr. V. Vaidyanathan, Managing Director and CEO of IDFC First Bank, to talk about the IDFC First Bank and IDFC Limited merger. Now, it was officially announced in December 2021, the fine print in the merger ratio, everything is out, and the market will be reacting to the swap ratio today. Mr. Vaidyanathan, good morning. Thank you for joining us. Walk us through what were the factors and what was the consideration to arrive at the swap ratio.
As you know, we have to follow all statutory processes for making this happen. So the basic consideration was that the extent of value of the holding that IDFC Limited shareholders held in the bank, they were holding close to 264 crore shares, and the shareholding of IDFC Limited itself was about 160 crore shares. So effectively, every shareholder of IDFC Limited was holding effectively in a see-through way about 1.66 shares of the bank in any case. But then there was a holding company discount and all that, and then there's a fair process of valuing these things. So after fair processes, we came to 1.55.
Okay. Is it fair to assume that IDFC Limited shareholders, they should be given a holding company discount, because it's only in India that the discount is very high. Globally, that's not the case.
Well, like I said, there are fair processes around these matters. There is a value for the bank, there's a value for that entity. There are market practices, there are precedences. This is a fair process that you run through independent valuers, through a fairness opinion by bankers, etc. You go through the process. The whole thing is that you find a value here, you find a value here, and you arrive at a value. We think the whole process worked out very professionally, very smoothly, and we're quite happy with the outcome. That's really fair to actually all shareholders.
So what is now for the shareholders of IDFC Bank in the short term, medium term, and long term once the merger goes through?
Well, that's a very long question, but let me just say that I want to think long. In the short run, let me just say that there is no overhang of someone holding 40% and what they're going to do with it, and there was so much of market speculation. All that is gone. Let me say speculation is gone. We are going to simply issue shares of IDFC Bank to the shareholders of Limited. Against 1.66, we're going to issue 1.55. That's it. So that's clean. Now, so speculation over in the short run and clarity. In the long run, if you think about it, this becomes a perennial institution because there is no promoter. So think of like how ICICI Bank, HDFC Bank, JP Morgan, whatever. You think of large institutions, they with a diversified public shareholding, they grow and grow and grow and grow forever.
Compliment you for the grit and the perseverance which you've demonstrated. It was not an easy merger. It has been a couple of, initially the first few quarters were tough, but in last 4 to 5 quarters, the banking business of IDFC First Bank has made a roaring comeback. So can I say that the bank and the franchise has just embarked on a multi-year growth journey?
I 100% think so. I think the really good thing about the bank, now that corporate structure issues are all out of the way, the core of the bank will now begin to emerge even more to people. The short point is that bank has a really very good business model, very profitable, very high asset quality. Corporate governance is really top class. So I feel that everybody, like once in your channel, I said, your non-believers will become believers about 3, 4 quarters ago. Now you'll all watch and see what this bank will turn out to be. I think it will be really good.
So what's next for Mr. V. Vaidyanathan? You were with ICICI Bank as a professional. You started the NBFC business. Then there was a merger. Now there is a merger between IDFC First and IDFC Limited. What's next now for you?
Well, it reminded me of a lot, actually. Yeah, there are like 4 or 5 deals that have happened in 10 years from that one, and then the merger with IDFC Bank, and now this merger. Now onwards, let me just say it's like more like settling down, because I think now we should look forward to a very stable build-up of the deposits, of the loan book, and let me just say all the adventures of 5 years of these 10 years are, let me say, behind us. And now, let me just say, it's more a stable performance and a stable, lookout, let me say, over the next decade. That is, I'm looking 1 decade ahead, and I really believe it's going to be something.
So can I safely say that IDFC Bank has now settled? And like you said, that the high growth patch which you just referred to is real, and there are tailwinds both from the economy, and there are levers which are internal, which will ensure that the next 3 years will be better than last 3 years?
100%. I have no doubt in my mind. Last 3 years were all complex things because we had to deal with all those, complex asset issues first. After merger, the names, they're all well-known names. Then, and there were like big amounts, like 3,000-4,000 crores of, bad loans we dealt with, Vodafone, Reliance, all that, Capital and Dewan and all. Then from there, we solved the issues, asset issues went away. Then we saw the liability issue. A CASA ratio became, moved from maybe 10% to 40%. So liabilities got sorted. Then profitability got issues sorted. Now we are very profitable. We posted PAT of 2,400 crores last year, and the trajectory. Let me just say that all the items are behind us. Now even the corporate streamlining is behind. I really think that the next 3 years, you should expect from us to deliver much better results.
I'll take a leap from your answer that the corporate structure of the bank now is completely streamlined. So in the overall scheme of things, what changes because of that?
Diversified shareholding, because there is no promoter after once the deal goes through. So once there is no promoter, then whenever you need capital raised from the market, and hopefully very soon our own internal generation of capital will be very strong. It's already touched at 12% from the last quarter's numbers. So basically, diversified shareholding, large institutional investors, probably even getting to the MS index. I read a report this morning. So these are really, and that will be frankly a very big moment. So we are looking forward to building a great bank.
So can I say that IDFC Bank now that size and the merger will increase its book value, is on its path to really become from a mid-tier bank to a large cap bank? I mean, that I think is clear looking at the way how this merger will give you reach, scale, and will shore up your book value.
Yes, as part of the process, the book value per share for IDFC Bank shareholders will go up by 5%. I told you we'll issue less number of shares than what we'll cancel. So therefore, we're going to issue 16 crore less shares. So, and also there is 600 crores of cash coming from approximately, give or take, in IDFC Limited. So short point is per share goes up, and that of course is an immediate upshot, let me say. But finally, of course, in the longer run, these things will be forgotten. What we're going to build will remain.
And personally for you, if I may take the liberty of asking, are you feeling settled about this marriage, or you're still looking out for new adventures?
There have been many adventures over the last many years trying to find a stable landing place, let me say. And I think we found a stable landing spot. And, we just look forward to a happy marriage from here on, yeah.
Well, I haven't had a chance, Mr. Vaidyanathan, to meet you for a long format interview, but now that this merger and the swap ratio has gone through, I'm hoping that, you can accommodate our request for a long interview where we can do chai and coffee ke upar gup shop. It could be chai for me, and I'm sure it'll be coffee for you.
Thank you. Look forward.
Appreciate your time, sir. Thank you very much.
All right, there you have it. Those are the key takeaways coming in from that interaction with V. Vaidyanathan. But let's move right on then and check in on the markets, because right now we're holding out around the 19,350 mark. Although we've come off a tad in trade, you've got the Sensex, which is up about 178 points. Broader markets pretty listless in comparison to what we witnessed yesterday. Yes, there are quite a few names that are floating around on the gainers' radar. So let's flag off some of those candidates. You've got an endurance tech, for instance, 7.6% up move. Bajaj Finance just, giving, investors giving a big a thumbs up to the kind of Q1 updates that were declared, and that stock is holding out smartly at 78.35. Bajaj Finserv in the green, something like a Prism Cement, Hero Moto up 2.5% as well in trade. But let's hear it out then from Ravi Dharamshi, CIO ValueQuest Investment Advisors, talking about financials and potential within the manufacturing sector.
Within financials, of course, we've been bullish on the lending companies, but non-lending financials are also at a very interesting juncture. See, India has brought into its fold almost 40% of the unbanked population in the last 5-7 years. There is a move away from hard assets, physical assets like real estate. Real estate and gold form a disproportionate portion of the majority of Indian households. Now there is a move away from it towards financialization. So there a lot more money is going to financial products. So non-lending financial companies are at a very interesting juncture. And whether I say it's the insurance companies or the wealth managers or the capital market related plays, these are all still suffering from the correction of the last 2 years or the last 3-4 years, where there were some regulatory kind of pressure on the company, or there was exceptional pressure on the yields, which was leading to the companies not performing. Now, some of the pressure is relieving, like we saw in the case of AMCs, that, okay, the regulator took a pragmatic view and decided to hold back and take the industry's feedback. So just like that, on the insurance front also, there was an overhang on the a particular company from promoters selling. They took back. So all those overhangs are now going away, which is leading to this space also suddenly becoming very, very attractive. So I would say within the financial, non-lending financials are probably at a slightly better risk reward at this juncture.
So would you be looking at doing the following: reduce exposure to corporate banks and maybe shift towards AMC or insurance or NBFCs, or you've already done that?
No, we are not looking to reduce the exposure on the lending side, but we are definitely looking to increase the exposure on the non-lending side. So it is not a either or call for us. In fact, we are bullish on both the spaces.
You were bullish on manufacturing, you were bullish on alternate energy, you were bullish on financials. We've discussed financials. What about the other two themes? Especially energy transition. We spoke with you when we had visited the factory of Wari. What is the update there? What is happening in that space? Because now it seems to be the pet theme for everybody.
Yeah, I mean, I think this is a theme that is going to sustain for another 10 years, maybe more also, but let's speak about next 5-10 years. And if that is the case, solar is going to be the backbone. In fact, other places like wind are also doing well with that theme. So, as an investment opportunity, still it has not opened up for the listed market investor. There are still some bets available on the unlisted side. Listed space does not lend itself to investing. So the theme is there. We'll keep our eyes and ears open to see where the opportunity arises. But one has to be constantly focused on this space, because the maximum amount of money that is going to be spent in the world in the next 10 years is in the energy transition space. So the opportunities will come. You keep your eyes and ears open.
What about manufacturing? And some of the EMS stocks have done rather well. Public information, some of your portfolio companies have done rather well. Do you think this EMS space is now looking like a mini frothy bubble, or it has a long way to go?
So as I mentioned earlier, clearly, there has been some returns have been far sooner and far more than we had expected. But at the same time, the absolute size of these companies are still very small. See, they are all within the range of 1,500 to 2,000-3,000 crore kind of a revenue company, and 100 to 200 crore kind of PAT. I feel these companies are going to go to minimum 500 to 1,000 crore kind of a PAT over the next 5-year horizon. So you can have 6 months of underperformance or any such thing, but I don't think it's the time to get out of this space. These companies will become far bigger from here as well. Manufacturing overall is at a cusp where we are witnessing a gush. The order books are filling up very, very fast. The conversions time is reducing dramatically, and companies are able to pitch to the.
All right, now I'm going to change gears and talk about what is happening in the entire consumption space. Trends are very divided. Rural India is doing poorly, urban India is doing much better. Luxury is seeing a pent-up demand like never before. Watches, luxury hotels, luxury cars, luxury. Look at the prefix luxury. That category is doing very well. Look at the prefix rural. That category is doing poorly. Why is that? How long will this sustain? Is this a trend which could be a multi-year trend where we are going to be seeing bottom of the pyramid suffering and top of the pyramid continue to add more muscle? Let's take that point forward with Arvind Singhal, Chairman and Managing Director with Technopack Advisors, and let's connect with him. Mr. Singhal, good morning. And Mr. Duggal is also ready. So good morning to both of you. So nice to see both of you. Is it raining in Delhi?
No, not today at least. It's hot and humid.
No, I was being told that every time when you were with Dabur, you would get up in the morning and before you would check up your phone, you would look at the sky and say, "Barish hone wala." Is that true?
Well, that is true partially in the month of July. In the month of April and May, we used to say, "Kitna garmi hai?" Because the hotter the weather, the better our sales of our summer products. So the weather is very important. In winters, we used to gauge the temperature for Chyawanprash sales. So that's something which was almost inbuilt into our DNA.
What is that one thing you do when you get up in the morning, Mr. Singhal? Look at your phone first or look at the sky first?
Actually, ironically, even for me also sky. Because unlike Mr. Duggal, our clients' fortunes, and I sit on a board of a particular company which is into consumer durables. So I've been praying for that company that we need hot summer in North. Consumer white goods air conditioners have suffered a lot. So yes, unseasonal weather patterns have a very, very cascading effect on multiple industries and businesses.
So, Mr. Singhal, this year, has the weather pattern really been that unusual? And if yes, do you think this is just a one-year phenomenon? Because all the consumer companies which we've spoken to, they are of the view what you just expressed. Unusual winter, unusual summer, unusual rainfall in the month of March and May has really dampened their sales. Is it true, Mr. Singhal?
I think so too. So, because the consumer behavior, let's put it like this, from a behavioral perspective, I've never understood the logic that if it is very hot, only then somebody will buy an air conditioner or a refrigerator. But the fact of the matter is that people do behave exactly, the temperature is 45 degrees. All of a sudden, they have a need to buy a new refrigerator. The same thing goes in terms of spending for clothing. The moment the weather patterns are slightly off, it is less cold. The winter wear per se, whatever it might be, goes for a toss. So this is something which is a phenomena which probably is more applicable to Indian consumers. And therefore, any kind of a disruption in what is seen as the normal actually ends up disrupting the consumer side of the business. And of course, it leads to a cascading effect in terms of excess inventory somewhere or a shortfall of inventory if the summers, for example, are very, very extreme or the winter is very, very extreme. So this phenomena is becoming more and more pronounced rather than lesser as consumers go for more discretionary spending as opposed to need-based spending.
Okay. Mr. Duggal, let's get in your take, in terms of the outlook, in terms of the demand trends as well, and wanted to just understand how things are shaping up because we sense that there is a recovery coming in for rural growth. Is that something that you're observing as well on ground, and what's the outlook of urban versus rural?
I'll speak about this, the non-discretionary, the staples part of the consumer space. And I think the rural is still stressed Urban is a little bit better off, but again, in terms of the staples, both seem to be going a bit of a demand issue. The reason is the weather patterns, which were alluded to earlier, that it's been a remarkably mild summer from the point of view, at least northern and western India, which has really taken a toll of the summer products, juices, etc., glucose. They've taken a bit of a pasting. Now we have onset of monsoon, which is, at least from North Indian point of view, remarkably early. For the first time in 64 years, you had the monsoon breaking in Mumbai and Delhi at the same day. And while that may be good in the short run, it also raises questions as to how the monsoon will play out in the key months of July and August, especially August. And with the El Nino effect and all, there's a lot of uncertainty there. So I think there are a lot of headwinds, and that is reflected by proxy measures such as MREGA uptick, which have been substantial in the last few weeks, which point to some rural stress at least. But having said that, you never know, things could change. It could be a normal monsoon and momentum could be regained. But at this point in time, there's a lot of uncertainty and, let's say, a little bit more negatives than positives as far as staples consumption goes.
Okay, fair enough. What about the outlook then when it comes to, Mr. Singhal, when it comes to the overall volume growth? We have seen that, for the consumer side, of course, there's been some relief because there have been price cuts that have been taken. Is this likely to be a driver when it comes to volume growth?
Yeah, unfortunately, in any case, traditionally the Q2, July to September, is generally a weak quarter of the 4 quarters in a year for most categories of consumer spending there. So as it is, we are entering Q2 with a somewhat subdued Q1, and with all of these weather-induced, and inflation is still relatively high as far as India is concerned. So all of those, there are more headwinds, like Mr. Duggal also just said, than tailwinds. One now has to look into Q3, which is October quarter. How does it go? I think most consumer product companies and retail businesses should be and would be quite circumspect of the prospects, at least in Q2.
Why do you say that? Do you think this is just the base effect which could kick in? Will this be the base effect of inflation, delayed monsoon? Because if you are making a case that we are in for a decent Diwali and Dussehra, because 2022, the Diwali and Dussehra was not great. So why do you think this year it could be different, Mr. Singhal?
I think the reason is like this, that again, of course, while it depends also on the monsoon this year, but having said so, inflation has been moderating there. I also heard you earlier in the program, a speaker was talking about manufacturing kicking in, and there are multiple other growth drivers in the economy, which would start to reflect in improved consumer spending as well. To me, the Q2 slowdown is not fundamental to India as such. There are no fundamental factors against consumption. It is just temporary because, like I said, partly because of weather, perhaps some disruption has taken place, and partly the lag effect of higher inflation in the previous quarters. And I think this should even out by the time we reach Q3. So I remain relatively optimistic still about the October to December period compared to what it was last year.
Mr. Duggal, this entire rural versus urban, do you think this is not like a trend? It is more like a phenomenon now, whereas the bottom of the pyramid will remain under pressure. Up until now, sir, the story, Mr. Duggal, for FMCG company was reach. The more you reach, the more you distribute, the more you will grow. But do you think that's passé now? And given the economy, how it is migrating, where unorganized is moving towards organized, where digital connectivity is increasing productivity, there would be a stress on the lower layer of the income bracket?
Yes, a K-shaped recovery obviously means that the bottom of the pyramid is more stressed. And I think that we are seeing the evidence of that. The NREGA numbers indicate that, et cetera, and also rural, which is more impoverished than the urban, is facing the brunt of the demand squeeze. So there is an issue there. And but there is an upside also. There's a huge tailwind in the form of the margin expansion. And that is very robust. And I think that could be a tool which companies will have to use to trigger demand. And in my own experience in the last few months and weeks has been that the companies which have been very quick on the draw to pass on some benefits of the margin uptick to the consumer in the form of better value, higher grammage, lower prices, whatever. They have benefited. Their demand side has remained very robust. The companies which have been more conservative and captured the margins have had the top line suffer. So it's a mixed bag. I think it's a very dynamic environment. One should take advantage of the lower material costs in offering better value to the consumer. Keep the top line robust, because I think that is the key indicator in at least the consumer's staple space. And do not try to get greedy and sit on supernormal margins, because that won't help in the long run.
Well, let me ask you a direct question. Let's say for the audience who wants to understand that which are the best stocks to buy within the FMCG space. Do you think for companies like, let's say, Dabur, Marico, HUL, Jyoti, companies which essentially are focused on the entire rural spread and the lower end of the pyramid, they need to reinvent themselves, because the India of past will not be like the India of future?
Well, they're already doing that. I think all companies are pushing the frontier in terms of the last mile reach. So that process is happening. They're using the digital infrastructure to craft out new forms of distribution. So that's something which I think companies are doing with some difference. Nobody is lagging on that frontier. But at this point in time, I think the packaged food business is in a sweet spot. The margin upticks there would be perhaps higher than of the other parts of the discretionary space. And if I were to choose stocks, I would rather choose it in that space rather than in any other, because they're sitting on a huge margin uptick.
Mr. Singhal, being a consultant, we can talk stocks here. Mr. Duggal definitely will not tell me whether Dabur is a good buy or Marico, but you are in a position to tell me which is a good food packaging company according to you one should buy. And you've obliged our viewers in the past with your ideas when you were bullish on, let's say, Trent and other companies. So how about obliging once again?
You're referring to me or you're referring to Mr. Duggal?
Mr. Singhal.
See, it's where, I can get away by saying, look, I have no understanding about stock market, how it plays around. But if I were to only use, some, again, the behavioral pattern shifts and the income allocation shifts, let's put it this way. Mr. Duggal talked about, I've been very bullish for the longest time on packaged foods in any case. There are multiple reasons for that. We can talk about some other time about these shifts. To me, companies like ITC are in a very, very good sweet spot now, because the portfolio they've built over a period of time, there were a lot of skeptics about ITC, till maybe about 2-3 years ago. But they straddle a very wide part of the consumer's kitchen, if I may say so. And I think that is one company which is poised to do, in my opinion, significantly better than what it may have done already so far. So that is just one single, like I said, I hold no stocks. I have no exposure to ITC in any way, but I have a lot of respect for the way they've built around a portfolio, sometimes being completely counterintuitive. I think they are in a good space for sure, as far as large companies are concerned. Most certainly Dabur. Again, I would be always confident about Dabur. Sometimes I'm hesitant about companies which have taken a stand that we want to look only into health foods or healthy foods. If you're in the market to make money, you have to go by what the consumers want. So I don't want to refer to any particular company in this case. It's not my remit to talk about that. I'll be very skeptical about companies which are mixing up a personal viewpoint or a wokeism in some ways with what the consumers need. I stop here, Nikunj.
Okay, put you in a spot there, didn't we, Arvind? But Arvind, Sunil, both of you, thanks as always for taking the time out and joining in.
Thank you.
Thank you so much for having us.
Okay, that's the word coming in on where the FMCG business is heading. But let's draw it down to hiring, because that, I don't know if it's looking robust or things are looking up or not. So let's chat about that. We have with us Ramani Datti, who is from Team Lays, joining in on the show right now. Mr. Datti, great to have you on the show. Miss Dati, I beg your pardon. We've clearly seen the impact of global recessionary trends all across, right? Break it down for us, whether things are beginning to look up, or would you say that the worst is yet to come in terms of pink slips getting handed here in India as well?
So it's very difficult to comment whether things are actually settling down or the worst is yet to come, because it's been almost close to 3 quarters now where, especially within IT, the hiring has been completely on hold. Right now, there are some green shoots with GCCs, with little bit of hiring happening at entry and junior level. But to be very honest, at mid and senior level, the hirings are yet to open up. And this is particularly for the IT profiles. However, on the flip side, for other sectors like telecom, BFSI, FMCG, FMCD, the hiring trends are very good. So over the last 2 quarters, we have seen the maximum hiring happening across these sectors, and we believe similar trend might continue for the coming quarters as well.
Hi, morning. Now, you have interviewed on the network Sam Altman, and just talking a little bit about AI, chat GPT, because that's really taking over. And he did say that to some extent it will kill jobs, as every tech revolution does. Is there that fear in terms of the kind of data that you're picking up, that job replacement or more specialized jobs now will be the need of the hour?
The entry-level jobs to some extent can be at risk. But again, having said that, even if there is all these chat GPTs or AI and other new technologies, there will be new jobs getting created in other segments as well, like within IT. So there will be a different segment of jobs that get created. So it can be some jobs may get dropped in maybe coding or other sectors, but new jobs will be created. So that is our view, because we have seen similar trends in the past as well, wherein the number of jobs get shifted from one segment, one profile to another profile. But the overall number of jobs in India will continue to grow, is what our view is.
Okay.
But what could be the change in profiling? See, there was a time, and I'm just bringing it out for the benefit of our viewers, when Y2K was in demand. When Y2K went away, those engineers had to retool themselves. Then enterprise came in. Then digital came in. But the net hiring has increased. So what happens in terms of redundancy? What happens in terms of tooling and efficiency? Because job will get created, but job will be of different nature and different skill.
So that's where the continuous skill enhancement has to come into the picture. And even the IT companies have been investing heavily in their employee skill enhancement. So they have been training them on newer technologies in order to address this redundancy. But for the next 1 or 2 years, they'll definitely be impacted, the entry-level jobs, since this kind of transition, the transformation is happening in terms of new technologies. And with the GCCs and more IT jobs coming to India, the overall number of jobs will continue to grow. As you rightly mentioned, over the years, we have seen how the jobs have shifted from one profile to another profile. So the overall number of jobs will continue to grow at a much faster rate in the coming years.
Talked about attrition high in tech and digital in 2021 and 22. Now I get a sense that the boom time is in 3 industries. One is financial services. Second, to some extent, I think, is travel and hospitality. And third is hospitals. What do you think will happen in these 3 boom sectors in terms of talent, availability, salaries, and also attrition?
So specific to salary inflation, during COVID years, we have seen unusual salary inflation levels of almost 12 to 15% even in these sectors. Specific to IT, it went to 20-25% as well. But those inflation levels are now settling down to 8% now, 6 to 8%. And that rate will continue into the near future.
I think we lost her there. Never mind. It's raining in Bombay. Always happens when it rains in Bombay. What is worth discussing again? 3 stocks. First, L&T Finance. Bring it up, please. Why? The stock just went berserk yesterday. There is going to be a change of guard there. The change of guard will happen next year. And the change of guard in a finance company is like, moving an oil tanker. It is not like a switch on or a switch off button. Books are built in financial, for any NBFC, books are built with a 3 to 5 year view. And if there's a change of guard there, it will take at least 2 to 3 years before the real migration and the impact of that would be visible. So while there is merit in assuming that the fortunes for L&T Finance will change, but that is work in progress. And the work will only start after 1 year. It takes 9 months for a baby to be born. So I don't think market should get excited today for a change which will happen next year, and the change evidence would be visible in FY25 and 26. That's like too much, too much of gazing in future. I'm not saying you're whistling in the dark, but too much of stargazing also is not good news. So that is L&T Finance. The second is iShares. And I've got this Nomura report. Just look at the way how they've described the bike. Harley-Davidson X440 price starts at 3 lakh rupees. This is a mid-capacity bike and has a new retro look.
Yeah.
It's a bike which is superior, and this will be the cheapest Harley-Davidson. And, boys and toys, if you tell me to choose between RE and Harley-Davidson,
Which one would you choose?
the answer is Harley.
Really?
No, see, RE is an old platform. I go back to that point again, that if you are a biking enthusiast, RE is a great inspirational bike. But for me, the appeal which an Harley will give, because of the global brand appeal he has, they are the big daddies or the big dadas, and they have the first recall and the first port of call if you're into the premium biking segment. Harley-Davidson is an aspirational bike to own. It would start minimum at about 20 lakh plus. Then they brought an India version down at about 6 to 8 lakhs, and then you were forced to change it back. So I think for me, it's an aspirational bike with Hero, with the Harley label, and a different look, which really could be a serious challenger for iShares. That's my limited point.
Yeah. Although the Royal Enfield Classic 350 is still the cheapest bike out there on the Indian roads. So far, we don't know how Bajaj Triumph is going to be priced. It'll definitely be more expensive than that. The announcement is going to come in only tomorrow. But yeah, Royal Enfield Classic 350, that's for 1.93 to about 2.13 lakhs. And Hero Harley is at about 2.29 to about 2.69. So, it starts off even above the higher end or topmost model of the Classic 350. And then, of course, there's Royal Enfield Meteor 350, which is priced at about 2.04 to about 2.25 lakhs. And then, of course, there's, Meteor 650, there's Java Perak as well, which is also relatively cheap itself.
Aisha, what I've always seen is that when you have a dominant player, like Royal Enfield has 90% market share, the Asian Paints has 65% market share, the incumbents can shake it up.
Yeah.
And that is what I think Hero is trying to do, because their margins are the highest and they have a fat market share. And that's the risk for a stock. When your fat market share, which you've dominated for years, when that gets threatened, and 90 becomes 75, it's going to change the way how markets would discount that stock, because you are giving iShares a premium for the dominance. Sheer dominance in that category is so large that markets know that you are disproportionate.
Sustained up until this challenging
43% margins. How? Unbelievable.
Yeah, and even within the 350 and 500cc, they have a market share of about 70%. So yeah, that is very commendable. This is Royal Enfield.